Good morning and welcome to the pre-market perspective. Today is Friday, April 26th, 2024. So, big rally yesterday and took us back above the 8. Kind of a surprising rally, I thought, in terms of how strong it was. But what we want to just consider is that it is a classic higher low here. And we've also broken this downtrend line, which is important. And we're holding above the 8-period moving average on the daily here. I'm just showing you on the NQ, but it's very, very similar on the ES as well. We can just look at the ES. Kind of the same exact situation where you've come into like this classic higher low and you've crossed your secondary downtrend and you're holding above the 8. So this is important. As long as we hold above that 8, things are more bullish and we have potential to move to the primary downtrend line. And then of course, if we close the daily bar above it, well, guess what? The downtrend is over. The market goes back to bullish. It's just very simple that way. That's the beauty of trend lines, is that it's absolute and it's not opinion, and market's not in a downtrend anymore, right? If you close the daily bar above it, you can't say the market's down, and if you keep shorting it, well, you can keep doing that at your own peril, but it doesn't really make any sense at that point. So keep that in mind. As far as profile, definitely a lot to talk about today. So we got some PCE prices just now, which caused some wildness and basically shot futures all the way up into here. But what I'm more interested in, although this is important that we had price exploration outside, it's kind of bullish, but is the fact that spike rules are in play. And yesterday we ended the day on a spike. And a spike is basically when you have a lot of bullishness like this, you have these single prints that shoot up at the very end of a session in the N period or O period. And that may be different for you depending on which letters you use. If you have this window trader market profile software, which we believe is the best market profile software in the world. But regardless, the spike at the end of the day is important because it's one of those situations where the only reason that we don't know more or there aren't prices past it is because the bell rang. Basically, the market just keeps going up right into the bell, and it only stops because the bell rang. And so thus, you want to see the next day if those emotional short covering type, hit the button, just get me out of my short at all costs prices are real or not. And basically the next day confirms for us if they're real or just a flash in the pan. And for now, they are real because we are opening where? Within the spike. So opening within the spike confirms the spike. Opening above the spike up here, that's the most bullish of the outcomes. And then if you open below the spike, that's a bearish outcome because it basically tells us that all the people who traded in the spike were wrong and it would be down here. So you want to also carry that forward in your narrative today, that if you have bearishness today and you lose the base of the spike, that is an area where the market probably goes lower because obviously everybody who is trading in the spike is wrong. There'll probably be a bounce there, I would say, more than likely, because that's where the profile gets fatter. But in terms of a larger short, and not to say that this wouldn't be a large short if you pulled this off, but just the fact that if you do bounce and then retest, the market probably goes lower and tells you that the spike wasn't the real deal, basically, just an emotional move. So keep that in mind. Without testing any activity like below the overnight low, I would say you have to be biased bullish today. I don't know what the play is. Obviously, when the bell rings, anything can happen. I can't be holding your hand during that. I mean, obviously, I do to a degree in weekly options advisory when I'm live every day. But for the most part, some of you are just looking at this in the pre-market, and this will be the first and last time that you hear from me over the course of the day. So what I would say to you is you want to be looking at pullbacks to buy as long as you hold above that overnight low. And there could still be pullbacks to buy below it, but over that overnight low is really quite bullish because just the fact that that overnight low happened in the middle of the spike tells me a good deal of market generated information, because you have to think of it in terms of like when what should happen doesn't. And maybe this isn't a case of what should happen, but this is a case of what could happen. And what could happen is that very easily all this emotional action here, which is really like a window, it's like a void, it's an area of like very no value, right? It could easily just get retraced in the overnight session, right? It could just fall back down, but it didn't. not only did it kind of formed somewhat of a 45-degree line here. I'm not going to officially call it a 45-degree line, but it's kind of in that direction, right? You can see that all the people who sold coming down to the low, they sold at lower and lower value, less and less value, meaning they had worse and worse location as they got down to the low. And that's obvious, right? Because that's the lower prices there made the low. And anybody who shorted down there was obviously definitely wrong. And you can see that the distribution tapers off as you go in that direction, right? So that proves to us that at lower and lower prices, it was constantly less and less value. So it's giving you plenty of market generated information. So keep that in mind. Gap rules are in play on top. Oh, I shouldn't say gap rules are in play. Excuse me. I should say gap rules will be in play if we open here. If there was to be an open above the spike, you would have, or above the RTH high rather, you would have gap rules in play. And that would indicate that you either, that there could be a gap and go scenario, which is gap rule number 1. And I'll just leave you on this note that if there is a gap and go scenario, or even on any bullishness, on any of the pullbacks, just remember that even though we're laying out the scenario that you probably want to be biased that way, just make sure that your context is confirming. Okay, that's very, very important. Make sure your context is confirming. Make sure your ticks are firm. Make sure you've got a majority of your 11 sectors in the S&P pushing in the right direction from the open. That's very, very important. It would be very helpful if you had a positive weighted AD, et cetera, et cetera. All right, keep all that in mind because it is important. All right, I think that's all for today. We'll leave it there. Hope you guys have a wonderful and profitable session. Hope to see you all later today on episode 3 of the weekend edition. Excited about that already. And that's all.